Welcome back to the channel. I'm Algabot, and today we're exploring an expert advisor for MetaTrader 5 called the Chande Kroll Stop Trend Breakout. This strategy is built around a classic volatility tool, the Chande Kroll Stop, developed by Chande and Stanley Kroll. Over the next few minutes, you'll learn how this approach wraps a two-stage stop channel around price, how it detects a shift in trend direction when price escapes that channel, and how it manages each trade with a stop and a target. Everything here is for educational purposes only, so let's dig into how it works. So what does this expert advisor actually do? At its heart, it's a trend-following breakout system. Instead of drawing a single line, the Chande Kroll Stop builds a channel out of two volatility-based stop lines. The upper line is a short side stop, and the lower line is a long side stop. Under normal conditions, price simply oscillates between these two lines, and the strategy sits patiently, holding whatever trend it last recorded. The edge this approach is studying comes from what the authors call a regime flip. When price makes a decisive move and closes cleanly outside the channel, the strategy interprets that as the trend tipping in a new direction. A clean break above the upper line points to an upward regime and a long position. A clean break below the lower line points to a downward regime and a short position. Because price has to genuinely escape the band, entries are infrequent and deliberate rather than constant. This system can be applied to any market and any single time frame that you select in the strategy tester, because every calculation uses the primary symbol and the chart's own time frame. That flexibility makes it a useful teaching example for traders who want to understand volatility channels and trend regimes, whether they lean toward foreign exchange, indices, metals, or other instruments. In terms of style, this is a patient, trend-following approach rather than a rapid scalping method. It's designed to stand aside during quiet, sideways conditions and to participate only when the balance between the two stop lines has clearly shifted. Every position is protected by a stop distance based on the average true range, and every position carries a take-profit set as a reward-to-risk multiple of that stop. There's also an optional feature that trails the protective stop toward the opposite channel line as a trend develops. Remember, this is educational information only, and trading always involves the risk of loss. Let's walk through the mechanics step by step. The Chande Kroll Stop is calculated in two stages. In the first stage, the strategy looks back over a window set by the AtrPeriod, which defaults to 10 bars. It finds the highest high over that window and subtracts an ATR multiple, defaulting to 1.5 times the average true range. That gives a preliminary stop that sits below the recent highs. It also finds the lowest low over that window and adds the same ATR multiple, giving a preliminary stop that sits above the recent lows. In the second stage, the strategy aggregates those preliminary stops over a second window, set by the stop period, which defaults to 9 bars. The highest of the preliminary high stops becomes the upper line, the short side stop. The lowest of the preliminary low stops becomes the lower line, the long side stop. Together, they form the channel you'll see on the chart. Now for the entries. On each completed bar, the strategy compares the closing price to the two lines. If the close pushes above the upper line by more than a small confirmation buffer, the trend regime is set to up. If the close drops below the lower line by more than that buffer, the regime is set to down. That buffer is expressed in ATRs and defaults to 1/10 of an ATR, which demands a clean escape rather than a marginal poke past the line. While price stays inside the band, the previous regime is simply held, so the system does not churn through repeated signals. The strategy acts only on a genuine flip. When the regime turns up, it closes any short position and opens a long. When the regime turns down, it closes any long and opens a short. Only one position per magic number is held at a time. Risk is handled symmetrically. On entry, the protective stop is placed at a distance of the stop-loss ATR multiple, defaulting to 2 times the ATR away from the entry price. The take-profit is then set using the reward-to-risk ratio, defaulting to 2.5 to 1, so the target sits 2.5 times further away than the stop. Finally, if the TrailToLine option is switched on, the protective stop is trailed toward the opposite Chande Kroll line as the trend runs, tightening behind the move while a flip to the other regime would close and reverse the trade. Let's read through the core of the MQL5 code as if we were sitting in MetaTrader. At the top are the input parameters. ATR period and stop period control the two windows of the Chande Kroll Stop. ATR multiple offsets the preliminary stops away from price, while confirm multiple is the small buffer in ATRs that a close must clear to confirm a break. Stop loss ATR multiple sets the protective stop distance, and reward risk ratio sets how far the take profit sits relative to that stop. TrailToLine switches the trailing feature on or off, and lot sets the fixed trade size. Below that is the regime logic. The code reads the close of the last completed bar and computes the buffer as confirm multiple times the ATR. Then, if that close is above the upper line, stop short, plus the buffer, the new regime becomes +1, meaning up. If instead the close is below the lower line, stop long, minus the buffer, the new regime becomes -1, meaning down. Now look at the enter function, which handles both sides. First, it computes risk as the stop loss multiple times the ATR. On the buy side, it takes the ask price, places the stop 1 risk distance below, and sets the take profit at the reward to risk ratio times that risk above entry, then calls trade.buy. On the sell side, it mirrors everything. It takes the bid price, places the stop 1 risk distance above, sets the take profit the same multiple below, and calls trade.sell. Both sides share the identical, symmetric risk structure. Let's bring the whole idea to life on a chart. On screen, you can see a series of candles with two lines wrapped around them. The upper line, drawn in red, is the short side stop. The lower line, drawn in green, is the long side stop. Together, they form the Chande Kroll Stop channel we built earlier in 2 stages. Notice how, at the very start, price simply drifts sideways between the two lines. The first few candles open and close comfortably inside the band, and the strategy holds whatever regime it last recorded. There's no signal here, and that's completely by design. The system is deliberately patient, waiting for price to make a decisive move rather than reacting to every small wiggle. Now watch the fourth candle. Price has been edging higher, and here a strong bullish candle pushes up and closes clearly above the upper stop line. This is the moment the strategy has been waiting for. Because the close clears the upper line by more than the confirmation buffer, which is set to 1/10 of an ATR, the trend regime flips to up. You can see the buy entry marker appear right at that candle. At the same instant, the strategy places a protective stop 2 ATR below the entry and sets a take profit using the reward to risk ratio of 2.5 to 1. So the distance to the target is 2.5 times the distance to the protective stop. Now follow the next few candles. Price keeps climbing, printing one higher close after another. As it rises, the lower stop line rises with it, trailing beneath the move. This is the trail-to-line feature in action. The protective stop is nudged up toward the opposite Chande Kroll line, tightening behind the trend while still giving it room to breathe. By the 7th candle, price has traveled far enough to reach the take profit target, and you can see the take profit marker close the long trade. That completes the long example. A patient wait, a decisive break above the upper line, a trend ride, and an exit at the planned target. Now the market rolls over. Look at candles 8, 9, and 10. The upward momentum fades. Candles begin closing lower, and the lower stop line stops rising. Price presses down into the band, and then, on the 10th candle, closes clearly below the lower stop line by more than the buffer. That's the mirror image of the earlier signal. The regime flips to down, and the sell entry marker appears. The strategy closes any remaining long exposure and opens a short. Just like before, it places a protective stop 2 ATR above the entry and a take profit target 2.5 times that distance below. From there, watch the final candles. Price slides lower, printing fresh lows candle after candle. The upper stop line now trails downward above the move, tightening behind the short in exactly the same way the lower line supported the long. By the last candle, price reaches the downside take profit target, and the take profit marker closes the short. So in one clean sequence, you've seen both sides of this strategy. A long that began when price escaped above the upper line, and a short that began when price broke below the lower line. Each with a symmetric ATR stop, each with the same reward to risk target, and each trailed by the opposite side of the channel. Notice what the strategy did not do. It never traded while price sat quietly inside the band. Every entry required a clean, confirmed escape of the channel. That patience is the entire point of the design. It aims to filter out the noise of a sideways market and take a position only when the balance between the two stop lines has clearly tipped one way. Of course, not every break leads to a lasting trend, and losses are a normal and expected part of any approach like this. That brings us to the end of our look at the Chande Kroll Stop trend breakout. We covered how the two-stage stop channel is built from ATR and highest low lookbacks, how a decisive close outside the channel flips the trend regime to open a long or a short, and how each trade is managed with a symmetric ATR stop, a reward to risk take profit, and an optional trail toward the opposite line. We also walked through the MQL5 code and a full chart example of both sides. Remember, this video is educational information only and is not financial advice, a recommendation, or a solicitation to trade. If you found it helpful, please like the video, subscribe for more MetaTrader 5 strategy analyses, and share your thoughts in the comments. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.